welcome to another financial analysis video with myself, Moeed Amin, and Ted Wayman. Today, we're going to be looking at another big international bank, specifically Barclays Bank. Now, before we dive into the financial statement of this company, the purpose of these videos and all this work that we're doing here for you is to help you improve your business acumen. Now, as Warren Buffett said, if you want to improve your capabilities in business, you better be able to speak the language of business, and the language of business is finance. So as we walk through these financial statements, we're helping you analyze other financial statements from other companies. And so we do that with famous businesses right now. Now, quick note on Barclays, just a really quick background about them. They are, of course, a well-known international bank. They're what's called a universal bank. Now, a universal bank is a bank that basically has a wide range of services that cover retail, commercial, and investment. Now, interestingly, the CEO of Barclays recently said on an interview that actually they could be doing a better job of showing the value of the investment side of the business. Although they've been doing reasonably well, their share price has been lagging behind some of their peers in the industry. We'll come on to that in more detail later on, so stick around for that. Now, this video was, well, this company was a request from one of our viewers. And 98% of the companies that we analyze are requests. So stick around towards the end because I'll show you how you can make that request for yourself. So this particular one is a great one because it gives us a bit of context as to what they're interested in. And we're going to address that in the financial analysis. So stick around for that as well. We're also going to talk about the share price towards the end. So quick note about the share price, just for context. Now, they floated in 1988. If you'd invested back then, you'd be sitting on a handsome increase of about 749%. If you invested 5 years ago, you'd be sitting on a decline of 14%. And if you invested a year ago, you'd be sitting on a decline of 12%. So there have been some ups and downs, and stick around because we're going to talk about that after we analyze the financial statement. So without further ado, we'll hand over to Ted. We'll walk you through the financial statements and really kind of teach you how you can read this yourself and what are some of the interesting things to look out for as well.
Thank you very much, Moeed. Good to see you again, and welcome to our, welcome back to all of our subscribers. Welcome if you are new, and if you are new, obviously, please do subscribe. So here are Barclays annual report and accounts, and you will notice up in the top left-hand corner, or left-hand corner of my screen, it gives me page 1 of 432. So that is a lot of pages of Barclays annual report and accounts. This is available on their website. You'll notice this is 2021. This is the year end 2021. We're recording this November 2022. So the numbers are going to be out of date reasonably quickly. And we're going to find that, you know, they're going to be producing their 2022 figures pretty quickly. Lots of information about the bank. I mean, really a lot of information about the bank. If you can wade through this, you're a better man than me. So who they are, what they do, what their strategy is, who's on the board of directors. They got a lot around audit committees and risk management and risk control, and it talks about their loan book, for example, so risk management around the loan book, etc., etc., etc. So lots and lots of information, but we are going to whiz through all of this, and we're going to go down to page 333, I think it is. Here it is. So this is their income statement. So here we have their income statement. Right. What are we looking at? What are the big numbers that we need to be aware of? Let me just make that a little bit bigger so you can all see that. There we go. So there is their income statement. We are dealing, this first column, we're dealing in millions of pounds. Now, just a quick caveat. When we analyze the financial statements of a bank, this is very different to a corporate company. Okay, so this is a very, so you know, we've been looking at, you know, companies, they make things, they buy things, they sell things, they provide services, they provide goods. Banks are very, very different, and so a lot of the terminology is different, and a lot of the ratios are not relevant to banks. So these are very, very different. So let me try and run you through some of the key numbers here. So first of all, these first two numbers, or these first three numbers, this is known as the net interest income. So this top line, the 11 billion, this is the interest they charge you to borrow money from them. So if you've got a mortgage with Barclays, you are they are lending you money, they are charging you, whether it's a mortgage or a credit card or a loan, for example. And if you're a company, you may have a loan. This is the interest that Barclays receive from you. This line here is the cost to them of the money that they lend to you. So Barclays hasn't got the money, they go out and get the money from somewhere else, and effectively that's your deposit account. Okay, so if I have a deposit account or a current account with Barclays, I put my money into the Barclays then take that money and lends it out to somebody else, like Moeed, for example, in order to buy a house. They charge Moeed 11.2 billion pounds to borrow money from them, and they only give me about 3 billion in interest. So they're making a profit on that of 8 billion. Okay, now this is what a commercial bank does, and so if you look at a commercial bank like Lloyd's Bank, for example, you'll see that that's a really big number. But as Moeed mentioned, these guys are also they're an investment bank, so they are fee-based, they are trading, they are charging fees for M&A advice, for example, mergers and acquisitions. They're charging fees to help companies raise capital through the debt and equity capital markets, and they are incurring a few trading fees as well. So they're trading on behalf of their clients or helping their clients to trade. They're charging their clients about 10 billion. The fees that they have to pay, that they incur themselves, about 2.2 billion. They're making another 7.7 billion pounds in terms of their fee income. So for example, when you take out a mortgage, you pay them a fee as well as actually having to pay the interest. So that's the kind of what's going on in there. So effectively, we've now got the net interest income of 8 billion. We've got some net fee income of 7.7 billion. They've got some trading income, so they're trading on their own book, and they're making a profit of 5.8. So these are the traders in Barclays who are kind of trading and making 5.8 billion. And you add all these numbers together and you get down to effectively a kind of total income all the way down to about nearly 23 billion pounds. Okay, so there is the kind of what we call net operating income. That's effectively their sales figure, for want of a better word. They're selling services, and therefore the real cost to them, well, the biggest cost to anyone like these guys are their staff costs. So we always like to look at their staff costs, and for banks we just like to compare the staff costs to that number up there. So 8.5 billion on 22, what's that? That's about a third. It's got to be lower than a half. As long as it's less than a half, we're kind of we're okay. Infrastructure costs, well, they're going to have a huge amount that they spend on IT, for example. So all those trading systems, lots and lots of money invested in that. And then we've got all the other admin expenses. So this will be the general marketing, sales, HR, finance, facilities, etc. So there's the cost of running the bank, and if we take the cost of running the bank, we take the income less the costs, we end up with a profit of about 8.4 billion, deduct a little bit of tax, and we end up with a profit of 7.2 billion. So Barclays Bank 2021, a 7.2 billion pound profit. Okay, significantly up from previous years. Now, one thing to note here is the difference between these two numbers. Okay, the difference between these two numbers will grow as inflation takes off, because as inflation takes off, interest rates go up, and as interest rates go up, banks can charge you even more for your mortgage, but they're not really going to pay me much more to deposit my money. So banks like high rates of interest. It allows them to grow that net interest income. So, as we go into a kind of a higher interest rate, these guys should definitely benefit and start to see even more profits on the bottom line. So there's the profitability, 7 billion. Bear that in mind. Let's go and have a look at their balance sheet. Now, again, balance sheet slightly different. These guys use cash to generate cash. Total assets, get this, total assets, 1.4 trillion pounds. Okay, so this is a big bank. To put it in context, I think the GDP of the UK is about 2 trillion pounds at the moment, something like that. So, this is a big bank, and if it goes bust, it's a big effort to bail it out. So the government is really keen that people like Barclays are well run, they are well regulated, and they don't go bust. Right, let's look at some of the big numbers we see in their assets. So first of all, what do we see? The cash. So just as you may keep your cash at Barclays, Barclays will keep their cash at central banks. So some of that will be the notes and coins in their various branches, but most of it will be cash parked at the central bank, at the Bank of England, which I think, I have to admit, is quite a big number. Loans and advances, this is their loan book. So they have lent money to you. They've lent money in mortgages and credit cards and personal loans to buy cars and all those other kind of loans, and loans to companies as well. And 361 million. And they really need to sort of watch that loan book and watch for the non-performing loans they call the deterioration. So we need to make sure that they're confident that they're going to get all of that money back. They are an investment bank, so they are trading. This is their trading portfolio assets. They also have some additional assets that they're able to trade, and then they've got some derivatives. Now, we're not going to talk about what derivatives are, but this is used by their customers to manage risk. So they might provide their customers with the options to buy or sell commodities or shares or currencies at future points in time. The thing to remember with the derivatives is that they're usually used as hedging instruments. So what they will do is that they will offset it. So I will give Moeed the right to buy dollars for pounds, and then I go to somebody else and give them the right to buy pounds for dollars. Okay, so those two numbers, the assets and the liabilities, if they're roughly matched, which they are, then that gives me confidence that Barclays have got, they've got their derivative products reasonably hedged against each other. And then we've got a few more financial assets. So these financial assets are similar to these types of financial assets, and they are different types of investments. You can see the notes for the detail, and that's basically it. A little bit of property, plant and equipment. They got some goodwill because they bought companies to grow. A little bit of property, plant and equipment, but not very big for their balance sheet, because they can rent their offices. They may buy their offices, but they can rent their offices if they want to. But really, it's all about that loan book. That is the big number up here. So there you go, 1.4 billion of assets. Let's look at the liabilities. So the liabilities, the biggest liability is your deposit. So the money that you have deposited with Barclays, your current accounts and your savings accounts, for example. We've also got some financial liabilities at fair value. Again, we can match that. Let me just scroll this up a little bit. So we can match the financial liabilities with the financial assets, for example. And then the derivatives, we mentioned the derivatives, how we've matched the derivatives on both sides. And that's really the big numbers in there. You'll notice here they've got other bits and pieces. So a couple of things to notice, if I just make sure I get the right lines. So these two numbers, this is the debt securities in issue and the subordinated liabilities. These are the loans, okay? So for a solvency, effectively, this is the bank has borrowed money. So it's borrowed money from you, and it's also borrowed money from the debt capital markets, and also what we call these repo markets. I think I've got the wrong lines there. So let me just make sure that they borrowed the money from you, they borrowed money from the debt capital markets, and all of these are effectively funding the business. This bit here is treated a bit like equity. So the people who've lent money to Barclays, they accept there's a possibility they're not going to get their money back if Barclays gets into problems. These guys here, which is you, do not accept that you've lent money to Barclays, and therefore you are expecting to get all of your money back when you go to the ATM machine, even if Barclays gets into financial difficulties. So that's a regulatory aspect, what's called solvency measures. And I think that's really kind of the key numbers there. So the assets 1.4 trillion. The liabilities 1.3 trillion. That leaves them with the equity of about 70 billion. Okay, so the 70 billion, that's the net book value of Barclays, really through the kind of the investment and the retained earnings. So you can see those retained earnings are being reinvested, and this is effectively acting, these numbers down here, this is acting as the cushion that allows Barclays to absorb losses, so that if they lend money to people who then suddenly find they can't repay their mortgage because interest rates have gone up, and therefore all the houses have to be sold, and suddenly they find that the collateral, the security behind those loans is going down. If that number goes down and that number goes down, it's really important that we protect these people here. It's really important that we make sure that you still get your money that is on deposit with Barclays, and that's what the regulators are all about. Bit of a movement in equity, so just worth looking at whether they are paying out dividends. Here we are, so we're looking at this column here. This is the retained earnings column, and we can see the retained earnings at the beginning here, 45 billion up at the top, and we can see a little bit of dividends being paid, but lots of share repurchase. So 1.2 billion of shares being repurchased, 500 million of dividends being repaid, and that is how they're getting the money back to the shareholders. But still, most of that profit is being reinvested back into the business. So there we have some of the key numbers. Let's just have a quick look at the excuse me, the share price. You'll remember that the request mentioned the net book value and the market cap. So the market cap, just to sort of highlight this, so the market cap, there's 25 billion. If you want to buy Barclays today, it's going to cost you 25 billion. Now remember, when you buy Barclays for 25 billion, you're buying all of the assets of this business, and you're buying all of the liabilities. In effect, you're buying the net assets, and you're getting net assets of 70 billion. So theoretically, what you could do is buy Barclays for 25 billion, close it down, and you would get given 70 billion. Okay, and so this is a company trading at below net book value, and that typically is starting to say this company is cheap. Our comment was that the shares are off by 20%, whereas other banks have seen a share increase. Why is that? Is there a problem with Barclays? Well, to tell the truth, it's really difficult to see if there's a company having issues from their balance sheet. All we can do is see some of the key numbers, but it does look to me on a book value basis that this is an incredibly cheap company trading at below book value. Now, we're not going to close down Barclays, but it does look like it is undervalued. The price to earnings ratio is about 5.29, so that's looking at the 7 billion on a market cap of 25. I think actually the P ratio is probably a little bit higher than that. I think if you look at it on a P ratio of if you look at the profit being about 7 billion, so if you're making a profit of 7 billion and your market cap is 25 billion, I would suggest that that's 3 times earnings. Okay, so again, even whether it's 3 times or 5 times, it's incredibly low. It's very, very, very cheap. Dividend yield is pretty small because it's not really paying out a dividend. Remember that when we looked at the movement in equity. Let me just pull that back up again for you so we can see those numbers. So there's the dividend it's paying of about 500 million, but most of the share most of the profit is being returned back to the shareholders through the share buyback. And even so, 1.2 billion of shares being bought by Barclays, the share price is still languishing right down in the doldrums down here. So this was the kind of the technology media bubble. This was 2000. There's the global financial crisis when Barclays had a bit of a hiccup, and down here, so it looks, banks have been really out of favor, and Barclays clearly is one of those banks which is clearly out of favor. And it looks to me like can it get any cheaper? I'm not convinced. I mean, this looks very, very cheap to me, and certainly looks like it is due a bounce back. So this, I think, could be a good long-term hold investment. You're probably not going to see a multi-bagger, but certainly I think the shares and the value of this company certainly should be trading on typically one, maybe 1.5 times book value. So you should be able to see a pretty reasonable return on your investment. However, don't forget that a lot of that investment, that value, may be sitting around the nervousness associated with these numbers here, with the loan book. What if we do go into recession? What if the interest rates go up too high? What if suddenly there's a lot of houses being sold? People are forced sellers, and if they're forced sellers, then they're going to find that the value of their houses are going down, which puts the collateral doesn't cover the mortgage, which means that the bank has to take the hit and could end up posting some fairly significant losses as a result. Just as we finish, let me have a look at so we'll just look at, we do like these days to have a look at the CEO. Now the CEO at this point was a newcomer. So let's just go to the remuneration page that describes how much the CEO is being paid, which is on page 168, if I can find it. So here is a page 168, and we have Venkata Krishnan is the CEO. You'll see he's being paid a total of just under £1 million, and he was appointed on the 1st of November 2021. So he's been paid basically for 2 months. So if you get about just under £1 million for 2 months, you're on for a total salary of about £5 million. Okay, £5 million does not appear unreasonable, whether anybody's ever worth £5 million, but doesn't appear unreasonable for somebody running a bank such as Barclays. Jamie Dimon is on in the multiples of tens of millions, and he runs JP Morgan. And if you are an employee at Barclays and you want to see the total, we saw when we looked at, and if I can just get my mouse working, here we go. So when we looked at the income statement, page 333, you'll notice that the income statement actually sets out, if you remember, the staff costs. So let me just pull that up. So there is the staff cost. Staff costs 855 million, so about 8.5 billion. I couldn't find anywhere in these accounts that said how many staff were there, but Mr. Google reliably informs me that there are 83,500 staff working at Barclays, and that means that the average salary is just over £100,000 a year. Now, obviously, if you are sitting in the trading department, you're kind of one of the big cats, then you're going to be earning bonuses in the multiple of millions, and I'm sure you're worth every penny of it. And if you're sitting in a branch, you're probably paid significantly less than 100,000, but you can work out, you can decide whether you are above average or below average on that basis. 100,000 and our CEO on 5 million, you can do the multiple there as well. So there you go, Moeed. That is Barclays for you. Hopefully we've managed to shed a bit of light. Looks like it could be a good investment. I am an investor in some of the banks. I have bought banks in the past because they've been undervalued. I don't know why the share price has been falling, but certainly there's no reason why Barclays shouldn't be able to bounce back with a number of the like the other banks have as well, and benefit, especially if we have sustained higher interest rates in the future.
Great. So there you have it. That's the analysis of the financial statements of a bank. Now, I promised that I can share with you how you can make a request to us. So if you are interested in the business, whether you're selling to that company or whether you are thinking about investing in them, or even if you have an interview coming up with them and you really want to understand the finances so you outperform in those scenarios, all you have to do, it's very simple, just leave a note in the comment section Obviously, give us the name of the company you're interested in and tell us why you're interested in that company, because then we can answer your questions as we're going through this analysis. So there you have it. And then we've also analyzed other banks in the past. So take a look at these videos. You will see we've analyzed Lloyd's and HSBC, so banks that Barclays compete with. We've also looked at challenger banks and also banks in the fintech industry. So an example of that is SoFi. So we've looked at SoFi, and all you have to do is search through our videos to find the analysis of their financials. So until the next video, thank you, Ted. Thank you, everyone.
Good to see you, Maurice. Catch you later.